Hey everyone, good to see you. So, something kind of surprising happened. Millions of people who receive Social Security got an email directly from the Social Security Administration, and it wasn't your usual kind of update. This one made a pretty bold claim, something that could change how a lot of people think about their retirement income. The email said that under President Trump's new Big Beautiful Bill law, most Americans would no longer pay federal taxes on their Social Security benefits. That's a big statement. And if you saw it, you probably had the same reaction as a lot of people. Wait, what? Is that actually true? Well, there's more to the story, and some of it's a little unexpected, because what the law actually says isn't quite what the email made it sound like. So today, we're going to walk through what really changed, who it affects, and why it's causing so much confusion. Because understanding what this bill does and doesn't do could help you figure out how much money stays in your pocket this year and beyond. And before we jump into all of that, let me know in the comments, did you get this email? Did it make you pause and go, is this legit? Because this one definitely did that for a lot of folks. And hey, if you find this kind of clear, no fluff explanation helpful, make sure to hit that subscribe button. I'd really appreciate it. So here's what happened. On July 3rd, the SSA sent out an email praising what they called One Big Beautiful Bill. And yes, that's the actual name, signed into law by President Trump on July 4th. They said it was a historic step that would finally remove federal taxes on Social Security benefits for nearly 90% of seniors. Now that sounds like a huge deal, right? Who wouldn't want their Social Security income to be tax-free? But here's the twist. That number, 90%, it's technically accurate, but it's also kind of misleading. Because what the law actually does is create a temporary tax deduction. It's not a repeal of the tax on Social Security itself. So now let's break that down. Starting in 2025, seniors who are 65 or older can now claim a new deduction. It's $6,000 if you're filing as an individual and $12,000 for couples. But it only applies if your adjusted gross income is under $75,000 or $150,000 for joint filers. Once you go above that, the deduction starts to shrink and it disappears completely at $175,000 for individuals or $250,000 for couples. So if you're someone in that income range, this could help reduce the amount of your income that gets taxed, which might also reduce or even eliminate the tax you pay on your Social Security benefits. But, and here's the important part, the actual rules around how Social Security is taxed didn't change. The same thresholds that have been in place for decades are still being used. That means the IRS still calculates how much of your Social Security is taxable using those old income brackets, $25,000 for single filers and $32,000 for married couples. Those thresholds haven't been updated for inflation since the 1980s. So yeah, it's not like your Social Security suddenly became untouchable. It's more that you're getting a little cushion on your total income. And for many, that cushion is enough to cancel out the taxes on their benefits. But not for everyone. You see, when the SSA said 90% won't owe taxes, they were counting people who already don't pay taxes on their benefits, plus the new group helped by the deduction. In reality, more than 60% of seniors already didn't owe taxes on their benefits before this bill. So this law bumps that up to 88%, but a lot of those newly exempt folks are in the middle income category. It's not the poorest seniors who benefit most, it's those in the middle, even upper middle brackets. And there's something else. This deduction is set to expire at the end of 2028. So unless Congress steps in to extend it, it's going to go away in a few years. And because it's not a change to the core Social Security tax law, that means the old rules are still sitting in the background, ready to snap back to full effect when the deduction sunsets. Now, I want to pause for a second and address something I've seen a lot of people asking. Does this mean Social Security is going to run out of money even faster? That's a really important question. The answer is yes, kind of, because one of the lesser known facts about Social Security is that some of its funding actually comes from taxing benefits. Back in 1983, Congress added that rule to help shore up the program's finances. So by reducing the number of people who pay those taxes, even temporarily, the program loses a chunk of that income. The Committee for a Responsible Federal Budget said that this bill could move the insolvency date for Social Security 1 year earlier, from 2033 to 2032. That might not sound like a lot, but when we're talking about the future of retirement benefits for millions of Americans, even 1 year can make a big difference. So then, why did the administration do it? Why push for something that doesn't fully remove taxes on Social Security, might confuse people, and could hurt the program's finances long term? Well, it goes back to campaign promises. President Trump has said for years that he wants to eliminate taxes on Social Security, on tips, and on overtime pay. This bill is a way to show progress on that promise. Even if it's not a complete elimination, it's a step in that direction. And for a lot of older voters, that symbolic step matters. It sends a message. We hear you, and we want to give you a break. Frank Bisignano, the commissioner of the SSA, said in the email that this is about letting retirees better enjoy the retirement they've earned. That's a sentiment a lot of people can relate to, but not everyone's happy about how this was rolled out. Some experts are worried that the SSA's message was too political. A few former officials even said it's the first time they've seen the agency send something that reads more like a campaign email than a neutral update. Some people even thought the email was fake at first, like one of those phishing scams that tries to steal your information. That's how unusual it was for the SSA to contact people like this. And that raised red flag for folks who've been told for years to be cautious of strange emails. Also, people under 65, they don't get this deduction. So if you're receiving Social Security because of a disability or you're getting survivor's benefits and you're under 65, you won't benefit from this bill at all. It's one of those things that sounds broad, but ends up being pretty narrowly targeted once you look closer. And you know what's strange? Some of the seniors who need help the most, those with very low income, won't see much change either, because they already weren't paying taxes on their benefits. So in a way, this bill mostly helps the middle, and that's not necessarily a bad thing, but it's worth knowing if you were expecting this to apply to everyone across the board. Now, let's explore further. What should you actually do if you're receiving Social Security and you want to know how this bill affects your situation? The best place to start is by looking at your income. If you're 65 or older and your AGI is below $75,000, again, that's not your total income, but the income after certain deductions, you're probably going to qualify for this new deduction. And that could reduce your total taxable income, meaning you might pay less tax in 2025 through 2028. But if your income is higher, or if you're under 65, or you don't file taxes at all, then this bill probably won't do anything for you. That's why it's worth talking to a tax preparer or checking in with a local tax help center just to be sure. And also, if you're someone who does their own taxes, this will be something new to watch for starting next year. So yeah, the email from the SSA, it wasn't fake, but it did leave a lot of people scratching their heads. It promised something big, and while the bill does offer a tax break, it's not a full exemption, and it won't last forever. But this kind of thing shows how important it is to read the fine print, because when it comes to taxes and Social Security especially, it's rarely as simple as a headline makes it sound. And guess what? We're probably going to hear more about this in the next few years. Because with elections coming up and Social Security funding still a major concern, you can expect more proposals, some helpful, some maybe more political than practical. So if you've got questions, drop them in the comments. Or if you've already looked into how this bill affects your taxes, let us know what you found. I'd love to hear your experience, and I think it could help others too. And if you made it this far, thanks for sticking with me. I really try to make these updates clear, honest, and useful. And if that's something you value, go ahead and subscribe for more like this. Take care of yourselves, and I'll talk to you soon.